Hey everyone, me Kevin here. Here's some numbers to pay attention to for June if you are investing in the market and you want to know what the heck is happening because the market's been quite odd. So I'm going to give you some dates that you want to pay attention to and what to expect. All right, first happens on June 1st, which is tomorrow, which also means that today is Memorial Day and that coupon code linked down below is expiring tonight. So check that out for the amazing programs, including lifetime access to all the content and guaranteed private live streams with me at least through the end of October. Check that out in the link down below and use that coupon code. So June 1st, ISM Manufacturing. This is a report on business activity. Basically, do businesses find that their business is doing better, worse, or the same? The same is a 50. If the reading comes in higher, it means that businesses feel like things are going better than they were last month. The last reading, which was the April reading released in May, came in at 60.7. We expect this to come at 60.9. Honestly, I don't think that this is going to be a big upside surprise or a big downside surprise. So this will probably meet expectations, just like on June 3rd when they come out with the non-manufacturing report of this, expected to come in at 63. Not expecting businesses to all of a sudden be a whole lot more or less optimistic. More important, though, is what happens on Friday. Because on Friday, we get jobs data again, unemployment data. I'm not talking about that weekly unemployment figure that comes out every Thursday. No, I'm talking about the first Friday of every month when we get a new unemployment rate. Last month was a disaster. We were expecting 1 million new jobs, and what did we get? 266,000. That led inflation expectations to go down, by the way, which is actually good and somewhat cheered by the market, because the last thing the market wants to feel like is things are overheating, and the faster we get to many new jobs in the market, the faster the Fed might pump the brakes a little bit, raising rates and slow this market down. Whoa there, horsey. Well, that was a big miss last month. This month, we are expecting 650,000 jobs, and we'll see what happens. If we miss again, it's not going to be so good for that inflation argument, lasting. Now, we know the inflation issue is here, but we're talking about lasting. Big question is, how long is that inflation going to last? Then, we're also looking at labor force participation. Right now, we expect that to go up a tiny bit, 0.1% from 61.7% last month to 61.8%. So not really expecting a surprise there. But the overall number, that's 650K job expectations, if that's a big miss, we'll see what happens, but it could lead to some softening inflation expectations and ironically do good for some stocks like tech stocks. But if it's a big beat, we get like a million or 1.5 or something, then those inflationary concerns could blow right back into the market, which we also have on June 10th, CPI data coming out. CPI Consumer Price Index data. Last month, we had a 0.8% increase month over month. That was a big move. And remember, we really care about month over month data. You're going to see this top line number that's really high, like 3 or 4%, whatever. Year over year, comparing it to the whole of last year. Both April and May, which compare April and May to April and May of last year, get reported in May and June. So this is the June version, right, for May. These are both comparing back to the whole of COVID. Not the best year-over-year numbers to use. Next month is when we can finally put the 12-month whole of COVID behind us. So really, what you want to look for in the CPI data is don't look at the headline number. Oh, inflation's 4% or whatever. Forget that. And I know many of you don't like the CPI, but really, what you want to pay attention to, month over month. How much inflation do we actually have from May to June? Last month it was 0.8. We're expecting 0.4. So hopefully it comes in at 0.4 or less so we can finally get past this kind of, funny summer. All right, let's move that over. All right, so then we've got, let's see here, we have June 11th. So June 11th, we have inflation expectations that come out. That's the very next day. Inflation expectations are a little funny because usually they go really, really high when inflation is really high. I generally don't look at inflation expectations, but you know who does? It's the Fed. The Fed cares about what people's expectations are because if people think there's going to be inflation, then prices can sometimes go up as people buy more now rather than waiting to buy. So we'll see. Right now, we have the Michigan inflation expectations, and it's not just for the state of Michigan. It's a university report, and they put it together for the entire country. Anyway, the current expectations are that the 1-year inflation expectations will be 4.6%, and that 5 to 10-year inflation will be somewhere around 3%. Both of those numbers are substantially higher than the Fed's target of 2%, so we're still seeing people expect higher inflation than what the Fed actually thinks they're going to be able to get this down to. We'll see if people's expectations have started to change. What's interesting about this report is the 10-year break-even rate on inflation has actually started to come down. This is fascinating. It sort of started falling after the jobs report last year. And what's really interesting about it is we've only been seeing inflation expectations go pretty much straight up to the moon. And they recently U-turned. So, for example, if you just go to Google and type in 10-year break-even rate, 10-year break-even rate, you can put this in. This is kind of taking the 10-year Treasury bond and aligning it with TIPS, which is a way of measuring inflation-protected securities. And this has been straight up, just sort of bottom line here. It's basically the chart's been going straight up, until we really got those jobs number and inflation data here in May, and we really started to see it plummet here recently, which is kind of interesting. Well, I mean, I shouldn't really say it's a plummet because it's gone up substantially over the last few months, but it's definitely a move to the downside. It's a welcomed move to the downside. It's finally an inflection point in inflation, and we want to see more of that inflection point. Personally, I believe we're going to see more of that coming in, obviously, September, October. We've talked about that many times before. And if we do get that inflection point, then we do expect certain consumer discretionaries, especially online, tech, maybe even SPACs and other stocks, to start doing better than they have been the last 3 months. On June 15th, we get retail sales data. It was kind of flat the prior month, and quite frankly, we want this to stay flat. And while sure it's good to have growth, we want to make sure that we're not getting people going crazy and in a sustained way spending money like crazy, because then we're really going to have that big inflation. Now, surprisingly, especially with expectations of maybe going into a frugal decade, we haven't really expected retail sales data to skyrocket. And even though it's obviously been doing way better than it was during COVID, it's not doing anywhere near as hot or crazy as it could be doing. So this is good. Jerome Powell does speak on June 16th, which is the day after that. It is an FOMC rate meeting, so obviously we will pay attention to what is talked about here, especially since the Federal Reserve is now potentially talking about tapering bonds, which sounds really kind of weird and complicated, but basically they might have a discussion about the taper. And you can guarantee Jerome Powell is going to get asked, hey, what'd you guys talk about? What'd you say about the taper? He goes, yeah, well, I think we're expecting him to say something like, well, we talked about it, but we decided that we have to stick with our course, and we have to wait for much more verification or validity of the market's substantial further progress before we actually start to taper. So we'll just kind of keep it on the table for the time being. And he'll probably do that to us for like another year before actually announcing anything. Who knows? Maybe it'll be 6 months. We'll see. I'll have to listen to that tone. Anywho, folks, there you have sort of the dates to look for this month. Not too many really exciting ones towards the end of the month. Few things like, we get the PCE, which is the personal consumption expenditures inflation reading. Most people care about the CPI relative to the PCE. They almost tend to correlate anyway. So I wouldn't worry too much about some of the other dates. Maybe there are things to pay attention to, but we'll talk about those more when the time comes. These are the big dates to pay attention to. So again, this Friday is a big date. ISM tomorrow, yeah, okay, we're not expecting anything big there. Friday, though, big date. I'd be writing down Friday, and I would be writing down June 10th. Those are big dates right there. June 11th, and then, of course, the FOMC and inflation expectations, and then the meeting on the 16th. Those are good dates to have as well. We'll track what happens in this market. It's been crazy. We'll see if it keeps going crazy. But, folks, make sure to smash, subscribe, share the video if you found it helpful, and we'll see you in the next one.